This is the briefing for Tuesday, October 28th. There is a Fed meeting and announcement tomorrow on interest rates, so that can change the perception of value on the part of traders and investors very easily and very quickly. I think the general consensus is there's going to be about a 1/4 of a point decrease in interest rates. If that were to change in either regard, whether it's more than a 1/4 point or whether there's no reduction in interest rates, it could have a pretty significant effect on the market as a whole. Now, one of the things, we went to new all-time highs in today's trading. And I have to say that if there is ever a rally that was sick, this is the rally that is pretty sick. So you can see this was yesterday's trading, Monday's trading, this was today's trading, and this was Friday. You can see the pause that we had, a little bit of a gap up and then a pause. So you can see that the rally is really extending itself pretty dramatically. But when I say that the rally was sick, it's because the internals are just really, really very sick. Now, before it gets to the internals, I want to point out also that we have an intermarket divergence between the Russell, the NASDAQ, and the S&Ps. So you can see here that this actually looks like somewhat of a little bit of a head and shoulders top, but there wouldn't be much distance in it. It'd be 252 down to about 241. 248.50. So really not a big move if that is a head and shoulders top. But in any event, you can see pretty clearly that this divergence, this intermarket divergence exists. So that tells us right away that something is not healthy within the rally itself. Looking at the internals, I mean, just in market breadth, this is S&P 500 breadth, 287 shares negative when we reach all-time highs. This is the NASDAQ breadth, 995 shares negative, reaching an all-time high, and in the Russell, 514 shares negative in terms of market breadth. So it's just really pretty surprising to see this market continue to move higher. I'm using a lot of caution. And while it is exuberance in terms of price development, certainly it is not so exuberant if you look inside what's happening with price development and the internals of the market itself. Looking at it on a daily basis, you can see the test of the all-time high, or the taking out of the all-time high right here comes in right around, well, let's see what this point is. So the high today was 678.47. So that is a new all-time high. This is volume in the spiders, so you can see that it is declining. A little bit different, a little bit of a flatness in terms of 52-week highs minus 52-week lows. And then, of course, you can see NYSE breadth was negative 736 shares in today's trading as well. In terms of the Qs, you can see the all-time high being taken out in today's trading, volume decreasing in the Qs, breadth negative 995 shares, and net volume down as well. A little bit different in the Qs, in the IWM, you can see volume decreasing as well. Breadth was negative 514 shares, so was net volume also. But looking at where we are in terms of total volume and net volume, I think this tells a big story, because you can see here that basically volume in the NYSE has been flat. This is NYSE net volume, and you can see the trend in net volume is down and even lower in today's trading with the S&P 500 and the NASDAQ up today. Same thing with NASDAQ net volume, negative 165 million shares. Volume trending higher, and you can see the trend in net volume is lower, which means there's more down volume that is accumulating as opposed to up volume. Looking at where we are in terms of overbought and oversold, we're basically neutral. So this gives us, really doesn't give us any help, gives the opportunity for the market to go either back to the upside or to the downside. This is really just a very, very peculiar rally. It's really one of these things, I think, that we've seen in the past where you see the internals of a market continue to decline, but the euphoric optimism in terms of price development overweighs what's happening really from an internal perspective, and then until eventually one day it doesn't, and then we get a turn down and we get a pretty good significant correction. How far that correction, assuming we get one, will go is yet to be determined. It will be determined by lower support levels as they are approached and broken. So that's going to be interesting should that happen. Now, I do want to caveat this whole thing in the fact that the internals typically, and once again, I've said this many times before, but I'll say it again, that from a psychological perspective, I use a 70-30% ratio. 70% of the time that the internals diverge from price development, then you will see price correct to the internals. But there's always a 30% chance that the internals will correct and support price. So it's not a 100% probability. So even as I sit here today and I see the internals looking very, very sick in today's trading, that I have to realize the fact that tomorrow there's a news event, and typically the news event will change things, and that we could see the internals correct tomorrow to support price, and then we could see the market off to the races once again. So it's going to be really key tomorrow as to what is going to happen in terms of interest rates, and then how will traders and investors interpret that move by the Fed. Have a great night, and I will pick this up tomorrow. It should be a very interesting briefing in tomorrow's trading, after tomorrow's trading.